Oh, I think I went live by accident. Shit. Okay.
Hello.
I guess we're
Morning.
starting.
Hey guys, I went live. I didn't even
What's that?
realize it.
What's that
Oh,
joke?
we're like
F it, we're going live.
hey guys. Welcome to another episode of Bitcoin Law Review with your host Tone Vase. We got a full show for you today. We got three lawyers starting off right now. We got three more that are gonna come in over time. Get ready because this might be a long one, and we got lots of topics for you. Let's start with very brief introductions, even though I don't think Jason Siebert no longer needs an introduction on my show. My fans are
Obviously, I
intimately.
do if you're going to keep mispronouncing my name, Tone. It's Cybert, for God's sakes.
How do you pronounce your name?
Cybert. Have you ever had a
It is
Steen of beer, Tone? Have you ever had a Steen of beer? No, you've had a Stein of beer. You have Heinz ketchup? No, you have Heinz ketchup. Cybert, for God's sakes. One thing
Well,
right today, Tone, just one thing.
All right. Well,
that's my introduction, by the way.
there he is, Jason Seibert. Are you working on any cases these days, or are you just out boating?
Well, I've been doing a lot of boating, but what I've been focusing on for the most part is I'm doing some advising of a few companies that are looking to enter the crypto space. And lately, I've been writing quite a few legal opinions on coins for exchanges. So that's been the focus of my practice. Also, still mentoring young law students and new attorneys on the intersection of securities law and crypto, kind of continuing the work that I did in Panama last year. So enjoying teaching and trying to get more attorneys into the space.
Gotcha. All right, very cool. Let's go over to Sasha. Sasha, how are you doing?
Pretty good. Thanks, Tone. Thanks for having us on the show today. Excited to be here.
Yeah, no, and thanks for coming out to Unconfiscatable. It was just you and David Silver made it out, did the law panel. The law panel was great. You ended up writing an article about FBAR. I can do a quick screen share. Maybe you can give us a very quick summary on that and why you wrote it.
Yeah, sure thing. That was a great question the guy asked. What happens after, like, if you buy Bitcoin on Coinbase and then move it to your hardware wallet, is it considered international banking funds, was kind of the crux of his question. And I had never considered that before. So it was really one of those questions that makes you think, if Bitcoin is held on the nodes all around the world, is it international? And then when we read the FBAR guidance that the IRS has provided, it's pretty specific that it has to be a banking relationship. Like you have to have control over a banking deposit or something along those lines. And then we looked further into it. So if you're, and then Crypto Tax Girl from Twitter, she had actually done a report on this as well. And she heard back from the IRS that if you are holding over $10,000 of crypto assets accumulative on exchanges that are outside of the US, you would be required to file this FBAR, which just basically lets the IRS know that you have the assets, but also carries a penalty of $12,000 for not doing so. But you don't need to do it for your own Bitcoin. That's not considered. If you scroll up a little bit, I have the definition of what is required. It's like, would be, no, keep one more paragraph or two more up. Sorry. Yeah, I think that's it there. It's like if you have 10,000 or more or signing authority over a foreign financial account, including a bank account, brokerage account, mutual fund, trust, or other type of foreign financial account, you have to let the IRS know. So that was, I think these were created to kind of combat people, hiding money in like Switzerland or the Cayman Islands. And yeah, they put a steep penalty in place, but again, it's one of these things. How are they really going to know if you haven't KYC'd on these crypto exchanges? It would be, I guess, the only prudent answer a lawyer can give is if you have 10,000 or more on one of these exchanges, you probably should report. or I guess remove the word probably even.
Right, and that's yeah, no, FBAR has caused a lot of people a lot of havoc. I mean, I've seen it firsthand, being in the world of finance, where we had people that had like joint accounts with like their mother in their home countries, and they ended up getting like destroyed by FBAR as if they're like hiding money. I mean, like this law went a little bit overboard with their intentions, but you can imagine, like, it's like your mom's savings and you happen to have your name, and she happens to have your name on the account, and then you're also like a US citizen or a US national now, but your mom is foreign, and all of a sudden you owe the government like tens of thousands of dollars in penalties.
Mm-hmm. And it's not penalties for the assets or any tax consequence. It's just penalties for not telling them, like not giving them a magnifying glass into your life.
Right. All right. And so thanks for the update on that. And Bill, how are you been, man? I haven't seen you in a while. I think I've only done like one or two of these shows sparingly, and you missed one or both of them. So good to have you back.
Yeah, thank you. It's nice to be back. It is just dawn here on the West Coast. Bill Restis. I'm an attorney in San Diego, California. My firm is Restis Law Firm. I have, for a lot of years, worked in the securities class action space, plaintiffs class action space. And when I opened my new firm about a year and a half ago, I started getting involved in the crypto class actions. I'm on the lead plaintiff team, lead counsel team in the Tezos case. I also have a case against Coinbase for failing to deliver unclaimed Bitcoin that was sent via email to third parties. And I also have been advising blockchain startups and entrepreneurs looking to raise funds and get consulting for their new businesses. I've been busy the past couple of weeks working on a very large dispute between some owners of a few entities here in California. So I have not been in the blockchain space recently, but you just put up there that we, and it's early in California too, so excuse me with my lack of coherence, but we have on your screen.
Good. Yeah, pulled up the latest in the Tezos.
Oh, you have on your screen there the motion for class certification in the Tezos case. That was filed about 2 weeks ago. And it has some very interesting, well, a class cert motion is really a procedural motion, and it tests whether there's a sufficient basis to tie everyone together in a class. And the court will be ruling on that probably by, I would say, June. And then we will see whether it is a case that involves thousands and thousands of people, or whether it's a case that involves the named plaintiffs. I have a strong feeling that this is a case that is very certifiable, and we will see the case certified, but you never know.
So, Bill, can I ask you a question on that?
Sure. I don't know whether I can answer it, but I can tell you what's in the docs.
Sure. Has the Tezos independent group that kind of formed, that 1,200 or so community, have they filed their briefs yet, or is that in the docket?
If anyone is going to file anything beside the defendants in the case, it would be at the opposition to the motion, which I think is going to be in mid-March. Sure.
I just kind of heard through the grapevine that there may be a group trying to file either an intervener or an amicus, claiming that they're not part of the class in an attempt to break up the class. But if that hasn't happened yet, then I won't ask you to comment on it.
Well, I'll just say this. I think there's some misconception about what the case is seeking. Some people hear the term rescission, and they think that it is going to force everyone who invested in the Tezos ICO to unwind their transaction. And that's not
Oh,
the
that's
case.
not the case. Yeah,
Right?
that's
That's not the case.
yeah.
It's optional. If the court were to rule that this was an unregistered and illegal securities offering under the Securities Act, then that would give any member of the class the option, the right to rescind their transaction, and would not automatically unwind their transaction. So I don't know how anyone in the class would not think that that's a benefit, particularly since Tezos now is very much underwater relative to the particularly the Bitcoin invested.
What's it at? Like 37 cents versus the 50 cents?
It's like 37 cents, I think. So, you need to, people like to confuse these things with US dollars versus the crypto currency, the Ethereum or Bitcoin that was contributed to it, right? Just because something is up in US dollar terms from its ICO strike price doesn't mean that it's down. It's not down in terms of the Bitcoin that was contributed. And so that is a net loss at this point.
Yeah.
That's all I'll say about it, but I think that that's some self-evident.
No, and I know you and I have spoken offline quite a bit about the Tezos issue, and I know that you can't speak to it, and I won't reveal our conversations. I find the entire thing interesting from a game theory standpoint of how and when people decide to jump in and jump out and proceed. So it's an interesting case, to be sure. The jurisdictional question alone just fascinates me. But
yeah, interesting thing about the jurisdictional question. So Sasha was just talking about, and it's too early, I can't remember the name of the statute that is intended to cover, Swiss and Cayman Islands bank accounts, right? FBAR, that's right. So I think that what we're going to see is that FBAR may be treated in the way that US courts are starting to treat the jurisdictional limitations of the Securities Act. So to rewind a little bit, Judge Seaborg in the Tezos case was dealing with the issue of whether you can apply the US securities laws to transactions that in some respect may have had a global reach, right? This was an ICO that dealt with people from around the world. So under US law, you can only apply the US securities laws if the transaction, to summarize and without going into detail, if the transaction took place within the United States. And what Judge Seaborg said was that the Bitcoin and Ethereum nodes are distributed around the world, but the predominant number of them are located in the United States. So
let's back up a second so that the people watching aren't confused. The transaction doesn't have to wholly take place in the United States, just one part of the transaction, right?
Yeah, there is and again, it's
so either you buy or you sell from within the United States, or buy.
So title has to transfer in the U.S. or God, there's a two-part test where it's an either or, and I'm blanking now, but it effectively is that the transaction title has to pass, funds have to pass in the U.S. And so what that means, if you look at it from a blockchain perspective, and you'll see that in the motion for class certification, is, at least in the context of the Tezos ICO, when someone went to the ICO website and clicked contribute, the funds were immediately debited from their Bitcoin wallet address or Ethereum wallet address and sent to the Tezos Foundation. And so because those nodes are clustered in the US, or a significant portion of them are clustered in the US, the judge, at least on the motion to dismiss, and he hasn't ruled on this definitively, but at least with the motion to dismiss, the judge said, that is sufficient to hold that the title passed in the US. And I think that, at least with respect to US law, judges try to have consistent reasoning. And so if you look at the FBAR statute, that it's very possible that courts may take this type of analysis and apply it to blockchain transactions, at exchanges that are not US based.
Well, Bill, this is the exact same way that the Southern District of New York gets jurisdiction over anybody in the United States through the banking system, because that they say that the majority of the banking system has computer systems that are in New York, and therefore funds must have transferred at some point in time through New York in order to give the Southern District jurisdiction. They did the same thing in the Shavers criminal case. So I think the recipe for the courts and for prosecutors is there. They just have to slightly change the language a little bit, check their boxes on using that similar language for those financial crimes, and I think those courts can have jurisdiction. But not to get too far out, we have so many things to talk about today.
Yeah, sure. So that's my introduction. Good morning.
Yeah.
All right, got it. No, thanks for that, guys. It was actually very, very informative. Let's jump into a couple of other quick updates before we get into the meat of our stories. So New York, the people continue to file for the crazy New York bit license, and another company just got approved. 88 additional Bitcoin ATMs are now approved in New York. I mean, I don't feel like there's Bitcoin ATMs all over New York City, but New York City is a pretty big place. I know Texas has a bunch of ATM machines as well. I know a company in Florida does ATM machines. They do hackathons there. And California, I'm sure, has some as well. So maybe a quick word on where do you guys see the legal structure around Bitcoin ATMs, and how is that working in your respective states? I guess let's start with Sasha.
Well, my state just had a wrench, thrown at it with this Espinoza case that I think we're going to.
We'll get to that.
Yeah, but yeah, the ATM situation is interesting. Like, most states allow you to operate as long as you have the federal FinCEN license, and then there's a bit more than a handful that you require the state license in, and so it's just easier not to operate in those states as much. And New York is kind of the heaviest regulated spot. But it's good that some companies are getting through the process. I understand it takes several years. I just submitted my first application about 2 weeks ago, and we've yet to hear back yet. But I expect it'll be quite a bit of back and forth as we go through the process. And in the end, it's probably going to create a very heavy compliance program that the guy that's been moving it forward, he doesn't mind complying with it if it means, like, he's a business person, and so if you can get the New York license, it's kind of like a barrier to entry, or it creates a monopoly, but the ones that get the approval stand to make a lot of money. So that company that's got the 88 machines there, they kind of, they're probably going to do quite well financially over the next couple of years.
All right, cool. Bill, let's head over to you. Anything you've heard, California, anything come across your radar in the ATM space?
No, I have to give you radio silence on this one.
All right, got it. Hey, Jason, how about you out in Texas? Anything come across your radar in the ATM world? Nope. Jason is getting a parking ticket, I think, for parking and speaking. All right, let's.
No, sorry about that. I'm actually at the boat yard where one of my boats is being repaired, and this is the quietest spot is in my truck. And one of the guys that's doing the maintenance has to come off of my job, and he's got to go fix a cooling tower. So he was just letting me know that he was going to do that. I'm sorry, you were asking about Bitcoin machines in Texas, yes?
Yeah, anything come across your radar, just to give us a general update on any interesting news coming out of the ATM space in Texas? You may or may not know anything.
No, so a few years ago, there was a little bit of an audit that was done on one of the machines. I think Sheldon is one of the largest operators in Texas. He had been basically running a full compliance program to begin with. Texas has very liberal rules when it comes to crypto and money transfer. It's very easy to comply in Texas. So based on that and the cooperative regulatory environment, there really haven't been any issues that I've seen or come across. Now, that doesn't mean that there haven't been any, but you know, I can't follow everything. So.
All right, let's do one more update. FINRA released its 2019 annual risk monitoring and examination priorities letter. It's a little too long and beyond my attention span. Sasha, did you skim through this, read it? Maybe you can give us a quick update what this what this annual letter is, and does it have any kind of relevance to us?
I did. I haven't given it as in-depth of a read as I would like, but some of the highlights that it had were that it's looking at risk relating to associated people in problematic regulatory history. So basically what that's saying is that I think they're looking heavily at crypto companies, like that's what they define as problematic regulatory history. And they want to know whether firms have adequate cybersecurity programs that will allow protection of people's personally identifiable information. And they did publish a pretty comprehensive report of what that cybersecurity program should look like and gave kind of a model for how to store the sensitive material. And they also said they have some concerns, you know, that the industry standards are not up to par with what they'd like people to be doing, and not just in our industry, but in all all of the areas that FINRA monitors, which also includes like traditional broker dealers. And they said that they want to evaluate basically how people are meeting the AML requirements. And then they're also looking at platforms that are issuing Regulation D offerings and want to evaluate how those firms are assessing risk for sales to non-accredited investors and what their escrow agreements look like, or what their whole escrow arrangements are looking like. And I remember when I was working for me and another student while we were in law school, we started this platform for the Jobs Act. We got the FINRA license to basically sell these Reg D, or the new things that were coming out. And that was the biggest thing, was how were we escrowing the funds? And we had to get a special escrow agent set up that while the 1 year wait time was being waited on, and we weren't talking about crypto at that time, it was just any traditional Reg D offering, you had to hold the customer's money in a special escrow, like a licensed escrow agent. And I think that's a pretty drastic difference than what we would be proposing to, if someone's doing a Reg D security token offering, there's no formal escrow agent set up for where their money is and where the tokens go and how that process works. So I think that's kind of what they're focused on. And yeah, it was a good report. Well, it was an interesting read.
All right, I'm gonna head over to Jason real quick. We probably should have gone through definitions, and Jason is pretty good at that. Hey, Jason, so before you comment, I don't know if you read this or not, but if you can give us the definition of FINRA, the Financial Industry Regulatory Authority, what do they actually do? And maybe you can just remind people what Regulation D is, Reg D.
Sure. So the Financial Industries Regulatory Authority is the self-regulating body that effectively monitors and self-regulates the stock exchanges, NASDAQ and New York Stock Exchange in the United States. So if you have a complaint against a broker, you file a complaint against a broker through FINRA arbitrations. They have arbitration services. They have all kinds of rules on testing and basically, if you want to be a broker, you have to be licensed. You would go through FINRA. So that's a very 30,000-foot view of what FINRA does, self-regulating.
So wait a minute. So FINRA isn't funded by tax dollars. It's more of a private organization.
Correct. FINRA is a self-regulating agency. It's not a government agency. It's what we would call a quasi-governmental agency. Right. So,
okay, great. Yeah, go ahead.
So then Reg D, under 506, you have exempt offerings. where where the SEC has said that we can't regulate everything. We don't need bells and whistles for everything. We don't need full disclosure documents. We don't need quarterly filings. There's certain types of offerings that exist in the world where there are people that are either can suffer losses or are sophisticated enough to where they can fend for themselves, that they don't need government oversight to the extent that you would get with something else. That's an SEC filing, not a FINRA filing. Okay, so the SEC then creates these exemptions from full filings under Regulation D. And the most popular is your Regulation D 506B offering. 506B allows for an unlimited amount of accredited investors and up to 35 sophisticated investors to be sold to within an offering for an unlimited amount of offering. But with a 506B offering, you're not allowed to advertise. 506C offerings, same thing, but you can advertise. The difference is in your requirements for your investors that are going to get involved in your program. Under 506B, the investors who claim to be accredited can self-affirm their accreditation. And under 506C, the investors that are going to get involved, if you're selling to them, you need to get some form of third-party proof, either from an accountant or an attorney, to certify that investor is in fact accredited. So there's a few distinctions in that. Now, the main thing that I think has been the biggest change in the last couple of years is a Reg A Plus filing, which is your crowdfunding filing, which allows you to sell the non-accredited investors through an alternative portal, but there is a mandatory 1-year lockup on those securities that are sold to those non-accredited investors unless they're going to sell to an accredited investor. So accredited investors are able to move Reg A Plus issuances all they want. The non-accredited are not allowed to sell to other non-accredited investors, but they can sell to accredited. Does that answer your question?
Yeah, it did. I have one more though. How broad is their definition of not allowed to advertise?
So advertising is an interesting subjective term. Like you can do a podcast, Tone, and you can say, hey, you know, I do this, that, or the other, and I'm an expert in analyzing crypto assets. Someone may see that as advertisement if in the back end your motive is to get people to contact you to purchase your services or to purchase securities based on your advice. If somebody says I'm an expert on this, that, or the other, or this is great, and contact me to buy, that's clear advertising, right? So that line of what is and what isn't advertising is generally considered to be the kind of, it's not a bright line test, but it's a rubric of are the statements being made intended to motivate or influence the listener in order to acquire the thing that is being sold. So that's a very subjective.
Got it. So on that episode where we, you know, like we're grueling Bruce Fenton, were we advertising Ravencoin?
No. We're not associated with Ravencoin, so we can rip it apart all we want. But if within that conversation where we were ripping Bruce Fenton, if Bruce said, look, Ravencoin's great, everybody should buy it, that may be seen as an advertising statement. And so if Raven was under a 506B offering, which they're not, they would then violate 506B because they may have engaged in advertising. Now, to Bruce's own admission, he spent months prior to the launch of the Ravencoin on a roadshow, right? Going to conferences, talking about Ravencoin, talking about the project. A roadshow is advertising. So, you know, the rules are a little funky on when that crosses over, but to allow those private offerings and to allow roadshows is why they created 506C, in my analysis. It's, again, very high level, not wanting to go into the weeds here.
Yeah, no, got it. No, that's good because we can also go into Reg S, which is the international stuff. And now let's not.
Sure. Well, that's what Main Street Investments, Jason Granger and Charlie Shrem wanted to do, was a Reg S by selling shares of an American company outside of the U.S. on the Ethereum blockchain.
Right. So we thank God we talked Shrem out of that one. And
What's that?
I said, thank God we talked Shrem out of doing that one.
Oh, man, that was so bad. Now, keep in mind, for any of these exemptions, for any of the folks that are out there watching that are thinking that they're going to file these exemptions or want to work with it, there's two things that eliminate your exemptions. One, for a Reg S, if you're filing a Reg S with a specific intent of avoiding U.S. law, you lose that exemption. And I think in the Main Street Investments deal, there had been an interview that Charlie had given in one of the coin magazines where he said the reason they were doing this was they were trying to avoid regulation in the U.S. And that was they just destroyed their exemption at that point. But if you're committing fraud, all of these exemptions go away as well. And Bill knows this, there is no exemption for fraud. So the moment fraud's involved, any exemption that you may be claiming or wanting to work with, all of those exemptions are immediately denied on a finding of fraud.
So just a last thing there, before I give my take on this FINRA, fraud is not only fraud in the sense that we all think of it, that you are consciously trying to take money from people by false pretenses. The securities laws require you to be truthful in everything that you disclose. So if you disclose something and you omit a fact that is necessary to make what you said not misleading, that's considered fraud as well. So not only—
Oh, that brings us to QuadrigaCX, right? The guy never told anybody that he was actually a different person and was running under a fake name. Fraud.
Yeah, it's surprising what the securities laws will constitute, what securities fraud can be construed as. So it's based on what is material to a reasonable investor. So if a reasonable investor would think that the identity of the person operating the exchange is important, and I think that if most people would think that that is, that would be could be construed as securities fraud. So it's really not only what you disclose, but what you fail to disclose that would put you in that box. Now, with respect to FINRA, I think this is all directed towards the burgeoning STO market, and the reason that FINRA is concerned about this or is focusing on this is because now we are in 2019, where the ICO is, at least in the United States, dead as a dodo bird, and so everyone is trying to. Hold on just a second. Let me turn this down because I think I've got some echo in the background. So everyone now is trying to find compliant ways to raise money for their projects, and the STO is the next big thing. So what FINRA is focused on is really some very interesting issues in the STO market, like custody of assets, whether there are sufficient protocols in place to ensure that the smart contracts that form the basis of these STOs are secure, whether there's proper custody of the funds. So I haven't gone into detail on this, but for me, that's what it's directed towards, and I think that's a good thing. We need clarity that the STO market is something that's brand new. I have people come to me a lot that want to do them, and although I've helped clients do the offering and raise the funds pursuant to the exemptions that Jason is talking about, I haven't actually found a good case for an STO yet, and it's because there are all of these issues that don't necessarily make it beneficial for a founder or a startup to use the STO market yet. I think we need a little bit more clarity and a little bit more maturity in the market before I'm recommending that to my clients. Well,
and I had talked about that in my Q4 predictions, that without the liquidity in the market and the availability for these STO assets to be actively traded, the incentive for a company to go down that path isn't there, because what they're seeking, which is, you know, an increase in value in that market, just isn't there because there isn't the activity. It's kind of a chicken and egg thing, and until there's more people that are using it, you know, the market's just not there for it to succeed.
I mean, in the sense though, if I'm an investor and I buy a share in a Reg D offering, there's no liquidity for that market now. So I suspect that we're going to have an improvement in liquidity for, you know, these STO offerings. The problem is if you just put them on, you know, let's say T0 or Securitize. I think those are the two. I haven't heard of anyone else who has launched their platform yet. If you do a Reg D STO, it's got a lockup period of, let's say, 6 months or a year. And suddenly now you're an investor in one of these STOs and you say, okay, awesome. I'm going to trade my shares of X offering on T0. You may find yourself in a very lonely environment with some tumbleweeds rolling across your screen because there's no one there to invest in it. And if there is, you're going to have. I think it's going to be more of it's really going to be more, even though it's automated, and like an over-the-counter market where price discovery is not available and liquidity is not there. So we're going to have some really interesting. Now that doesn't mean it's not better than the system that we have, but I could talk about all the issues if I have my coffee, but I'll shut up now.
All right, thanks guys. Yeah, we should probably get into our actual topics. We're gonna say hello to David Silver, but before we get to David, just very quick, one sentence answer. Should the libertarians be hostile to FINRA the way they are to the SEC and the CFTC and every other government agency? Is FINRA like a friend of the free market and the people? That like, I think you know.
Remember, FINRA's not a government agency.
Right.
But they act as an arm of the SEC in a huge way. They've even contacted, when we were running that crowdfunding portal, FINRA wanted to know of anyone that had contacted regarding crypto. And I think like there's got to be memorandum of understanding with information sharing between the two agencies. And I think FINRA's primary purpose is to reach the same goal as the SEC, which is to protect investors, which means putting regulations in place that would be opposite to libertarians' ideology.
You know, my answer is if it's a fundraiser and you're raising funds, it behooves anyone who is an investor in those funds to have some sort of either SEC or FINRA oversight. No one wants wild. Do you really want Wild West capitalism? This is what caused the 1929 market crash in the US and the creation of the Securities Act of 1933. I don't think we want to go backwards.
Yeah, no, I kind of somewhat agree with that. Hey, David, thanks for joining us, man.
Hey, man, thanks for letting me on.
Morning, David.
Morning, everybody.
All right. Let's put FINRA to rest for a second, and we're gonna move on with our actual stories. Wow, the introductions took longer than expected, but there was a lot of really good information there. So, where's my next one? Okay, so our first story, let's try to make this one quick because the meat is coming later on with Quadriga. So this is a lawsuit filed by the Cato Institute along with the Civil Liberties Group against the SEC versus like saying that the SEC settles like 98% of all of their cases out of court, and those that, you know, they don't admit guilt, they pay a fine, and then the SEC can enforce a lifetime gag order that they can't even talk about, you know, what was discussed. Now this is the actual, one of these, the actual lawsuit. I have a couple of things here for you, which one is which. So here's the actual lawsuit from the Cato Institute. Sasha, I think you looked through it. how is this looking? How do you think they got a shot at this, and the SEC will now have to go to court with everyone?
It's really hard to say, but I think there's a lot of merit to what they're saying. Basically, they're saying it's a violation of your speech to, have a lifetime gag order. They have standing because they're trying to publish a book where one of the people that would be a contributor to the book is unable to make any comments because of this gag order. And they're saying that it's a content-based speech regulation, which is presumptively invalid because these type of content-based regulations are unconstitutional unless they're narrowly tailored to serve a compelling government interest. And in a lot of the interest in these ones of keeping people quiet, it's going to be hard to say that that's a compelling government interest. Compelling means it's like the highest priority, like very, very important reason to keep this person quiet. Like it's a matter of national security. And usually in the SEC things, it's people have neither been like proven guilty. They settle, they pay the SEC some money, and then they're told they have to forever remain quiet. And it hasn't even been proven that they've done a violation of any securities laws. So I really enjoyed reading this. I thought Cato made excellent points, and I'll be interested to see how the SEC responds.
David, let's get you on this. I don't know if you are familiar with this, if you want to comment, or we can get a comment on one of your cases, which is the coin signal scam, and then we'll see if Jason or Bill have any comments on the Cato lawsuit, and then we'll move on to more crypto-related stuff.
I'll jump in on the Cato lawsuit for a second. I mean, the problem, this is one side of the argument. Judge Rakoff in New York has been a thorn in the side of the SEC for a while about similar things. First, let's talk about the gag rule that is. It's for settling defendants. The main defendant that this case is talking about that got filed is a guy who plead guilty to both the civil and criminal infractions. If you take a plea, you can always, dictate the terms. The question is the SEC so big that they're intimidating people into taking a settlement agreement? Frankly, all settlement agreements contain, usually, especially in my cases, everyone always asks me, how come I never talk about my victories? Well, when I sign a settlement agreement in crypto, I tell you every single time they make me include a confidentiality provision that is effectively the gag rule. So it's not just the SEC who requires this, it's defendants who require this too. If they're going to change the rule, they're going to have to universally change the rule, and then defendants aren't going to be allowed to have confidentiality agreements. So it's either good or bad. You can't have it both ways. And in the end of the day, I think that if you voluntarily get into a settlement agreement, you're going to have to live by the agreement you make. So I don't think this is going to get very far.
But David, what do you think of the fact that SEC has the ability to freeze the defendant's assets so they can't even hire an attorney in some cases, versus in the civil one, there's no one side has a lot more power over someone's financial assets?
Well, again,
hold on, wait. I have put in several motions at the beginning of my plaintiff's claims to ask the court to seize the assets of the defendant in order to keep my client's money from running out the door. So that's not just a tool that the SEC has. Anybody in a civil case can do that.
Exactly. And I'm in New York tomorrow on the case that Tone just showed, the coin signals case, where the guy ran a fake $10 million hedge fund and now wants to pay his lawyers at Ballard Spar $800 an hour with my client's money. I mean, defendants want it both ways. They want to be able to say, you can't gag me and you can't stop me. I'm just saying it goes both ways. At the end of the day, you have to take, if you want to do a settlement agreement to avoid litigation, then you got to live by the terms of that settlement. Why is it I'm not allowed to talk about my Nano case and why we dismissed the case? Because we entered into a settlement agreement. You know,
well, I think there's a difference, David. I mean, this is the First Amendment, right? So, and that applies to government restrictions on speech. So,
no,
you know,
that no.
I think this isn't a government restriction. This is an agreed upon contract settlement agreement between parties where they elect on an end result, and they've contracted to say neither of us are going to talk about this.
Well,
Exactly.
no, I understand where you guys are coming from, but let's look at the government purpose behind this. So the First Amendment deals with you have to have a compelling state purpose. Now, obviously, what this gag regulation is supposed to do is to make sure that someone doesn't settle with the SEC and then later on go out into the investment industry and say, well, you know, that I didn't really do anything wrong, and you know, it was just to get the SEC off of my back. I think that's a narrowly tailored.
Exactly what it is. Well,
Yeah,
you
I
agree.
didn't
That's
really do
exactly
it.
the purpose of
I
it.
mean, I was forced to settle. I mean, so I think that's the purpose that the SEC is attempting to accomplish. The actual
at the
gag
same
order.
time, so one of the things that's happening here, right, is the SEC through an administrative action comes in and they want to do an investigation. They don't have the resources to put 100 hours into an investigation before they start an investigation and start involving people. So at that point, if I'm a defense lawyer, I appreciate the fact that all investigations are confidential. Anything that happens in investigations is confidential, because the last thing you want, if you're representing a company, is the SEC on day one of their investigation to go out into the world and say company ABC is committing fraud. If you're a publicly exchanged company, that impacts the price. It reduces consumer confidence. It impacts the market. So having that level of confidentiality during the investigation phase works great for both parties. It allows them to be able to exchange information, come to some conclusion in the end. And then if there is nothing that's found wrong, then nobody knows, the market's not impacted. If there is something and there is, some form of violation that occurs, you can settle. The market interprets the settlement as there was something that's going on wrong. The SEC did its job and the market continued forward. I see good and bad from that. I've represented clients that have been involved in the SEC, and they're like, I want to be able to talk about that. I said, great, take it out of the administrative action. Tell the SEC to sue you in court, and then everybody knows about all of this. It's you have tools as a litigator, as you know, to take things out of the administrative world and put them into the civil courts or into the courtrooms where it's open for the public to see. So I think while this is an interesting case of attacking the practice, what I'm saying is that a good litigator can avoid all of these things by advising their client on how to move forward and not even getting themselves into the confidentiality scenario to begin with. So I think there's a misconception that this is somehow some oppressive thing that the SEC mandates or gets away with. All of these things happen at the end result of a final basis of decisions and paths along the course of the conflict.
Well, and I don't disagree with that, but I think that if you look at this, because the analysis that the court is going to do under the First Amendment is whether the regulation is narrowly tailored to fit the purpose. And I would not be surprised if the court looks at it and says that it's overbroad and needs to be retooled and more narrowly tailored. We'll see.
No, I don't disagree with that. I mean, I think at the end of the day, there's hypocrisy in the rule and the way it's utilized. But going on what Jason just said, and since we're a crypto show, I mean, right now, the SEC, the CFTC, FinCEN, and everybody is investigating Coinbase, Kraken, Poloniex, Gemini, every exchange out there. And they've already come to some deferred prosecution agreements with some of the exchanges. So confidentiality is part of the investigators' war chest and how they're used and how the government uses it. But it's also part of the defendants, when they settle the cases, that they get to go around making statements that are just blatantly false. But there's a confidentiality provision that they made the people go away. And don't even get me started on arbitration provisions where companies in crypto are lying about getting sued because all the cases are in our confidential arbitration. The confidentiality and the gag rule is just a tool, and I think I think people better be careful about this. Might be careful what you wish for when God wants to punish you. he grants you exactly what you're asking for. Here, if the courts eliminate the gag rule, all of a sudden there's going to be a run on people who say, well, my First Amendment rights are being compromised in my confidential settlement agreements in the tangential litigation, and everyone's going to be allowed to tell their side of the truth, and suddenly litigation is going to now double in price, and no one's going to want to settle cases. You're going to want, the SEC is going to say, well, if we can't settle the cases, now we have to drag on the investigations. So all I'm going to say is you got to be careful what you ask for. Sometimes you get it.
All right, let's stay with you, David, for a second. I'm not very familiar with this case, and I do need to read more about it. But what's going on with CoinSignal? Because it sounds like they were like a group through Telegram, and I guess they got were they a paid group? Just give us some background on this. I'm very curious. I can't wait to read more about it.
So CoinSignals is run by a young guy named Jeremy Spence, who, had the right time, was taking investor funds to invest in BitMEX mostly. He was running this through BitMEX. And
what do you by invest in BitMEX? You mean trade on BitMEX?
He was trading on BitMEX, and a lot of the timeline goes to BitMEX shutting down accounts for US citizens. So he starts a Telegram group. He doesn't charge you to be in the Telegram group, but if you get into his private Telegram group in order to stay, you have to give him money to invest. He starts a fund called the Coin.
Oh, wow, that is a bad idea. He should have just charged for the Telegram group. Holy shit.
Yeah. So he then raises, and he claims to have a quant bot that trades and is beating the market. And it turns out when BitMEX shuts down, the U.S. logins and starts going after stopping some of the U.S. Traders, in about October, he announces that he's been hacked. It's a lot of the money's missing. He then in December announces that he lied about everything. It was a Ponzi scheme. He literally puts out there, one of the Telegram chats, that he used new investor money to pay off older investors. I mean, everything you can say wrong. He then says, I've come up with a distribution for the fund. I'm going to liquidate the fund and distribute the assets. And the way we're going to distribute it is we're going to give the early investors what their entitlement is based on what I promised them, and not give the newer investors their principal back. It's like everything wrong. And then
you can't make this shit up. Only in the crypto space. Like, how old is this guy?
I mean, like, and
this isn't limited only to the crypto space. I hate to burst your bubble, but this shit happens everywhere.
See, Jason, I'm starting to agree with you more and more. I say that all the time now. It's not just crypto. It's just a new area for old fraud. So Jeremy's going to be in court with me. We're in New York at the TRO. He's actually stipulated to the permanent injunction. But he's really, he keeps changing his story and admitting he's a pathological liar. So it's kind of like, I don't even know, like, I've never been in court before where the judge already ruled on the TRO motion, and he's like, I'm just relying on everything the defendant has said publicly. And the opposing counsel was like, yeah, he said this, Judge. He was wrong. It's literally, the opening line is, I'm a pathological liar and I've lied about everything.
Well, I really wish you well on this one, David. I had a chance to look at this case, and because it was a Ponzi scheme, and I hope that there's funds that are collectible for the investors, and that it didn't all go to hookers and blow. But it's shocking to me, really, and to everyone that's listening, even the most sophisticated traders at the most sophisticated investment firms on Wall Street rarely have a bot that can consistently beat the market. So if anyone is telling you,
it's the magic box, Bill. It's the magic box. It's the black box.
The magic box. I mean, people,
money goes in and more money comes out.
Just don't be stupid. I mean, if it sounds too good to be true, it is. And if it's some idiot in a chat room on the internet, who's running a boiler a boiler room investment fund, you're going to lose your money, and it's a scam.
You know, my favorite part
these magic. Hold on, just a second.
They sent me Bill's questions to them, and I told them because they went to Bill first, they had to pay me more money because Bill's leftovers. I need to be paid more money to handle that type of case. But Jay, remember the Jim Burke case we did together?
Oh yeah, of course. It's a great case. I like Jim.
The guy who stole the money on LinkedIn claimed to be a janitor who got our guy to give over a former NFL and Super Bowl MVP, invested with him because he had special quant analysis. And when we were doing the deposition, we pulled out his LinkedIn and we're like, "Are you really a janitor?" He was like, "That's my LinkedIn profile."
Well, it's like Maduro being the president of Venezuela and deciding economic policy. It's the same thing.
Yeah. So there are a lot of people that have magic boxes. One of the cases that happened in Florida, you remember, David, was Valhalla Funds and Art Nadell. And Valhalla Funds claimed that Art Nadell was this genius and he had this magic box, right? What people didn't know is that Art Nadell had been disbarred in New York for stealing client trust fund money to pay off loan sharks. And his magic box was taking new retirement money in the Valhalla Funds and day trading penny stocks and losing it all. So, be wary of the magic box.
Yeah, in this case is especially interesting. And one of the reasons, is that everything about the case, and this is what separates it a little bit from other cases, everything about it was fake. Nowadays, especially in crypto, the ICOs, they were pitching an idea without a company behind it. Here, everyone's like, well, we were following the bot. We saw the numbers. It really is a sad way. This is no different than BitConnect. There's no special, bot out there that can get you a 20% ROI on your money every 2 weeks. Anyone who's promising you more than a 10% ROI over a year, they're doing something wrong.
All right.
Oh, wait, hold on. Scroll back up to that black screen. That's the one where he admits he was lying for the last 2 months.
Wait, this one? This one.
No, it was the full screen was dark. He's like, I've been lying to you for the last 2 months. All the money's gone. Sorry to tell you. This was one of the easiest complaints I ever had to write. It's already gone. Don't worry about it. There it is. No, that one, right
there. Yeah.
I've spent the past 2 months trying to hide my drawdowns with lies and deceit. I continually for the positions I was in to be able to in a better state, but it never came. I sincerely apologize. You can't
David,
make.
Can I interrupt for a second? David, I just want to say something to everybody that's watching out there right now. Don't drunk text your guilt.
Especially if you're a scammer.
Just don't drunk text your guilt, right? Contact a lawyer. You can drunk text your lawyer and it's confidential, but don't put it on Twitter, man. Just,
So hey, Ben, I'm just curious, and you may not know this yet, but does he have funds to return to the investors?
Of course, he just hired Ballard Spar. I mean, that's $700 an hour. Yeah. He's got money somewhere to pay fancy lawyers. I say this all the time. I love when fancy law firms come into my cases. It means the bad man has some money somewhere.
All right, quick question. 2 questions, actually, because I do want to move on to the next story, and I think Drew is with us. So I want to bring him in. So what does this do for, other popular traders or other? See, this is why I'm so careful. I get text messaged every day. Somebody wants me to retweet them because it will give them instant popularity. And I basically tell everybody that I don't do that because I'm not an idiot. And so what does this do to other crypto people that were promoting this guy? And my other question is, how does this look on BitMax, considering there are no KYC over at BitMax? So I don't know if you want to take this one, David, real quick, because we have like 4 more stories, and I want to introduce Drew in here.
So we have started suing the promoters in our lawsuits. You know, it's still working the way through the court system as to how much liability the promoters are going to get. Twitter, thankfully, is starting to work with us, identifying promoters based on their Twitter handles. But, you know, it's also easy to get around Twitter's KYC policies. The BitMEX is not working with us yet. So, you know, that's problematic in and of itself. But nowadays, I pretty much have a process when I start one of these lawsuits that immediately we get a temporary restraining order against the defendants. And we subpoena every exchange in the globe that's willing to work with US courts. And it's a pretty sophisticated process, but I've gotten really good at it over the last year. Of the moment I have a court order, I know exactly across the globe what exchange is going to freeze assets and which exchanges aren't, which also gives me the ability to tell you which exchanges are legitimate and which ones aren't.
Gotcha. All right. Let me stop screen share for a second. Drew Hinkes, thank you for joining us. It's been a while since you've been on the show, man. Give us a quick intro.
Hey, Tone, thanks for having me. I'm Drew Hinkes, friend of the show, occasional joiner. Thanks for having me. Very briefly, I'm general counsel of Athena Blockchain. We're a U.S. investment bank helping folks to raise money by issuing securities in tokenized form. I'm also an adjunct professor at NYU's School of Law and NYU's Stern School of Business, where I teach a class with Professor David Yermak called Digital Currencies, Blockchains, and the Future of the Financial Services Industry. I am not teaching this semester, which means that I get to actually spend time at home, and hope to be able to join you and our other esteemed panelists a little more often now that I'm not constantly traveling.
Sweet. Hey guys, we've been on for about an hour. I gotta ask who's got time restraints and who has to leave soon. And we do have 4 more topics. You guys know what they are. So if you have to leave soon, let me know which topic you want to go to next. Otherwise, we're gonna pick up with Cindy Axne and her bill through.
Joan, I've got to jump off in about 15 minutes and just wanted to talk about Espinoza. Is that okay if we do that?
That's great. We can jump straight to Espinoza. That's perfect.
Sorry about that, guys.
No, that's good. This is why I asked. Let's skip this. Espinoza was going to be our next topic, so we'll go to it quickly. So this one, I had known that Espinoza's trial got. I mean, he won in local courts down in Florida. For those that don't know, I'll let the lawyers explain the story more, but Mitchell Espinoza was charged with 3 counts. One of them was 2 counts of money laundering and 1 count of operating. Here they are. So it was engaging in a money transmitter business, 1 count, and then 2 counts of money laundering. And he won the case and he got off, and there was an appeal by the state to a higher court, and that got overturned. So now he's back in a lot of trouble. I don't know who wants to weigh in first. I guess Jason, we'll start with you, and then we'll see what the others have to say on this.
So just briefly, rolling back in time, the Espinoza case was taking place in 2014. And there was a lot of stuff going on. There were a lot of questions about how Bitcoin was going to be treated by regulators, by courts. In the Shavers case, we'd already had a federal court say that Bitcoin was money. That was the shot heard around the world at that point. And then one of the arguments that Espinoza made here in Florida was that Bitcoin isn't money. And as a result, it couldn't be money transmission or money laundering. And just kind of summing up. And as a result, the trial court agreed and said Bitcoin wasn't money. And, you know, that's the quick overall summary. So now you had these conflicting jurisdictions where, you know, the Eastern District of Texas and the Southern District of New York with Judge Rakoff had all agreed that Bitcoin could be money for purposes of monetary value exchange when analyzing statutes. And then you had this rogue Florida decision that said, well, it's not. I recall having a conversation with Adela, and it's a shame that she's not on. When that case came out, she called me up and said, what do you think? I said, it will be overturned on appeal.
Yep.
And basically, the reason I knew it would be overturned on appeal, and we can go into all the specifics of the plain language of the law, plain language of the statute, intent, everything else. But from a political standpoint, this is just kind of the reality, and maybe you guys can comment or not. Maybe I'm giving him too much deference. Not very many judges in this country are willing to go against what Judge Rakoff says in the Southern District of New York.
Mm-hmm.
Drew, do you want to comment on that? What do you think? Am I right or wrong?
I can tell you that Judge Rakoff, like many of the members of our federal judiciary, is incredibly smart, and Judge Rakoff particularly is viewed as very influential. He has taken some views which I believe are appropriate. They haven't always survived appeal, and I'm thinking specifically of overturning a click wrap agreement that was used by Uber in a notable case a couple of years back. The Second Circuit overturned that one. But Rakoff is as smart as they come, and particularly is attuned to technology-specific issues. So like many other judges, his comments certainly are afforded a significant amount of respect.
Yeah, I think that's right. Very well said politically, Drew. Well done.
Yeah, and speaking of the appeal, Drew, you wrote in to the appeals court to somewhat on behalf of Espinoza, correct? Or
not necessarily. Let me help you out here, Tone. They're in appellate courts. There's the opportunity for people who are interested but not necessarily a party to the case to provide information to the court that they think is important for the court to understand in coming up with a determination of the legal issues that are before the court. That process is called the submission of an amicus curiae brief, and that's a Latin word for friend of the court, essentially. And
I apologize to interrupt. I have to say goodbye and thank you. Great hanging out with everyone. Thanks so much. Be well. If you need to contact me, you can reach me at www.cyber-law.com. There's an information page. Fill it out. I'll get back to you. Tone, great to see you again. Bye, everyone.
See you, Jason.
Hey, thanks for coming, Jason.
Bye, Jason. Good luck with the fixing of the boat.
Thanks. Appreciate it. Now, if I could just find a disconnect button here on this screen. Where is it?
Just throw your phone out the window.
Perfect. Bye, everyone.
So an amicus brief is something submitted to the court by someone that the court approves to provide their perspective on the legal issue in the case. In this case, I was fortunate to be chosen to write on behalf of the Digital Currency and Ledger Defense Coalition, along with two colleagues from the Greenberg Traurig law firm, John Londot and Michael Moody. And basically, the Digital Currency and Ledger Defense Coalition is a loose group of lawyers who know a lot about crypto, who have volunteered to provide pro bono or discounted services for people who can't afford lawyers in the crypto world. And they're choosy about what they do and which clients they represent, but a lot of what they focus upon is advocacy within the courts for common sense and useful interpretations of laws as they apply to crypto. And so in this case, the court approved the DCLDC to provide an amicus brief speaking to the issues that were before the court in the Espinoza case. And the brief is about 30 pages long. And basically it says, this is new technology. The law as it existed at the time did not squarely encompass unique attributes of this technology. And the court, when reading the law, should look at this as something new, should not kill it before it has a chance to develop. There are some arguments in there that Bitcoin isn't necessarily the best tool to use for money laundering or illegal money transfer. And they argue something called the Rule of Lenity. And the Rule of Lenity is a doctrine that says if a law possibly applies to something, but it doesn't squarely fit, the court should give the benefit of the doubt to the person accused of its violation, because the law didn't say Bitcoin, the law said funds and value and money. And it's not clear whether Bitcoin fell within the definition of funds and value and money. Like Jason suggested, the trial court order took a view which many people thought would not be sustained on appeal. And in fact, that's what happened here. But the work through the Digital Currency and Ledger Defense Coalition gives folks in the industry an opportunity to express to the court, like they did in this case, let's not throw the baby out with the bathwater here. We've got new novel technology that has a purpose and a meaning, and we should take a thoughtful approach in the interpretation of these laws to not necessarily come down hard, even though, in my view, that I share with Jason, coming down and applying the law as they had seemed to be a principled way to resolve the issue.
Gotcha. And the other thing I was going to say before Jason ran off, but he had to go. So in that case, I don't know if David, you're still with us. So in that case of the Trendon Shavers' case, when they were able to get a ruling that Bitcoin is not a security, but they lost but the judge in Texas said that Bitcoin was money, and then it was that ruling was used to put Charlie away. Jason tried to appeal that Bitcoin is money. He tried making sure that it's not money, but that one didn't go through either. And now and that's where this conflict kind of arose now.
Yeah, I'm not really sure. I don't really know much about this case, so I'm not going to really talk about it. But Drew and I normally, share similar opinions, except for we split on some of our who we consider friends. It's always important to see who's writing the brief and what position they're taking. The advocacy on behalf of the blockchain community versus advocacy on protecting investor rights. We're on the flip side of our earlier conversation. The brief that we're kind of looking at, and the advocacy that was utilized for Espinoza, kind of went the other way here. The court kind of said, "Nah, I'm not buying what these blockchain companies want. We're gonna go back to the basics and hold people accountable." I'm actually a fan of what the appellate court did here.
To be clear, Silver and I pretend that we don't share a hive mind, but we agree on most things if you pay close attention. I believe that the appellate court got it right here. And while I believe in the brief that was filed for the DC-LDC, I think that as a matter of law, the ruling on the appellate court was correct. Now, what the law meant at the time that Espinoza was arrested and charged is different than what the right policy is for the people of the state of Florida and how businesses and the government should look at these issues. There are kind of three things happening here. It's what does the law mean? It's what is the intention of the regulator charged with enforcing the law, and what should the law be? We've seen states go in a variety of directions on this issue. Pennsylvania recently issued a memorandum that took a completely opposite approach and said, we don't consider crypto assets to fall under their specific money transmission statute. And so they issued an amazingly industry-friendly set of rules that govern businesses in Pennsylvania. Florida, so far, has this state court order, which was overturned on appeal. We've got a Department of Financial Regulation that has an opportunity to establish its own policy, and we've got legislators. So now we'll have a chance to digest this, and all these various folks can come out and say, we saw what the Third District Court of Appeal said. The financial regulation can come out with new guidance that says we don't agree. And any legislator can offer up a new law that says, we saw the way this court interpreted the law, we disagree with it, and we think this is what the law should be in Florida. So for now, we have an appellate opinion, which is the best evidence of what that law means in Florida right now. We haven't seen the end of the story.
And what's really cool about what Drew just said, for people who don't know what Pennsylvania did about a week or two ago, Pennsylvania basically said, we adopt the federal language on what money is. And money is a currency issued by the recognized government. And therefore, Bitcoin and cryptocurrencies don't fall under that. Ironically, of all people would assume I would disagree with that. I actually agree with that. I mean, that's a very simple way. They simply looked at what the federal rule said and they interpreted it that way. Well, that's why I am a big advocate of, we do need clarity in the space, and clarity in the space will eventually mean that crypto is the equivalent of money. Now, you can disagree with that either retrospectively or prospectively. That's just my opinion. But I don't necessarily, I think it's good that states like Florida and Pennsylvania are fighting about this, because in a year or two, we'll get some clarity about what it actually is from the regulators and from the federal government.
If it were to be considered money, they should also tax it like money.
Amen, sister. I'm with you, Sasha.
Sasha gets the high five from everybody on the panel.
Yeah.
What I thought was interesting in this opinion too was how they made the distinction between currency, payment instruments, and monetary value, and they kind of pointed to the fact that the New York case, the Mergio, or is that how you say it?
Yeah.
Yeah, they kind of not made fun of Florida, but like they certainly pointed out that the analysis that was done in Florida missed. They kind of said that we missed the boat when we didn't contemplate the fact that money qualifies as monetary value, and that monetary value would be included in the payments instrument, which would make it fall under the Florida money transmission guidelines, or at least that's how I understood their argument.
I agree with that.
Hey guys, so one quick thing. So going back to the whole Mitchell Espinoza case, he was just like a local Bitcoins dealer, right? Like he didn't actually defraud anyone.
So my understanding of the facts is that he was a local Bitcoins merchant. He met with folks who were undercovers. They did a series of transactions suggesting to him that the transactions were for the purpose of changing the quality or character of money so that it would not be traced back to either a retrospective, meaning already happened, or prospective, meaning about to happen, illegal transaction. And a lot of people have said, hey, that sounds like entrapment. They're saying, I need to change this into Bitcoin because I need to cover up this crime that I did. But the actual statute allows law enforcement to do that.
Bill, you want to throw a few words here?
You know, I'm going to have to, my phone is starting to blow up. My clients are waking up and I'm in the middle of a very high stakes corporate governance dispute out here in California. So this is very fascinating and I'd love to have an opinion and to jump in. I'm going to watch the rest of the podcast. I really appreciate the opportunity.
Well, why don't you, feel free to like stay on, and then if you want to say something, just say it. I won't call on you.
Well, it's early. I'm stinky. I'm still in my pajamas. I need to get dressed, get in the office. But I'll watch this later, and everybody have a great day.
Hey, all right. Sounds good. Dan, I want to get your thoughts on the major one out of Canada, but it's all right. We'll probably be talking about it next week as well. All right. Thanks, Bill.
Thanks, guys. Have a great day.
See you, Bill.
All right. Let's jump over to another.
Tone,
go ahead, Sasha.
One more thing, or I kind of wanted to ask Drew this about the Espinoza case. So when I was reading this opinion, it said that they did 4 transactions. The first one was like for $500 and $1,000. They were saying they were kind of something involving Russia and fake credit cards. Like the Espinoza was under the impression that it was illegal, but then when they tried to do the big transaction for 30 grand, they met him in a hotel room that was already wired, and gave him 30 grand fake, counterfeit money. And he realized it was counterfeit, or he had a lot of questions around it. So he didn't accept that money or even do the big transaction. Is that true? Or did he take it and give them Bitcoin for the final transaction?
I don't have.
Yeah, I heard the same thing, Sasha. I heard he turned down that final big transaction.
Yeah, I don't have any personal knowledge of the facts. I don't know how to answer that except to say facts are what you can prove in court. And if if the state can prove that through evidence, then they're going to have then that's the evidence. And if Mitchell's counsel can prove that that didn't happen, then that will be the evidence provided to the finder of fact, which in this case would be a jury.
I don't think it makes a huge difference anyway, because the statute for the money laundering, like the criminal statute, is if it was a transfer between $300 and $20,000. So he's, even with doing around $2,000, which is what it looks like he did over a few transactions, he's still over $300. But it seems like a pretty, it sucks for him doing a small transaction with these undercover agents in 2013 when there was a lot less, like he was running local Bitcoins transactions, probably not, you know, trying to do anything super illegal. And then we got that nice ruling from Judge Puller saying if anyone wants to sell their own property, that's not for us to weigh in on. It's the matter of whether it gets transferred through a third party, kind of like a Western Union situation. And then now, you know, in 2019, we're still going back to this small thing that was, you know, had really not any victim to it. And yeah, it seems, I guess they want to create the law and this is the test case, but it sucks for Espinoza.
Yeah, no, there's a lot of things going on in this case. One of which is they clearly, I think that the moving papers indicated law enforcement wanted to make this a test case. Like they purposely sought this out. It's not as though somebody, to my knowledge anyway, had complained to the police that somebody was victimized and that they were out there trying to remedy a wrong. There was a joint task force, this is by memory, between local law enforcement and the Secret Service that did this. So it was clearly an intentional program. There are a bunch of really interesting statutory interpretation issues that I need to think about more. There's a definition of what it means to transmit money, which suggests that taking cash from someone and sending them crypto would be transmission because it's sending money or value to another place. Traditionally, these statutes are interpreted as I take money from party A to move that value to another place, whether it's another account on behalf of party A or another person, say party B. And so I need to think about, and I apologize for being a little bit less prepared than I could have been for this. I need to think about whether this is an interpretation of the statute that makes any sense or not. It could be that the court is sort of straining into an interpretation to achieve the policy goal that it wants, or it could be that the court is telling us that this is how they want the statute to be read. However, there are some administrative opinions and some advisory opinions from the Florida Department of Financial Regulation that suggest a different reading. So, you know, I think Silver said it best, the story's not even done here. And then we have the idea that the regulator could come back and say, we view it a different way. And then the legislators could come back and say, we saw how the court ruled, nice job, we want it to read differently, so here's a new law.
Which didn't they already kind of do that with the House bill that came out, I think it was in 2016 when the first Judge Puller said that if it's his own personal property that he was selling, it wouldn't, she's not going to prosecute. And she said some kind of language around, you know, the statute was so difficult to understand that even legal professionals couldn't agree to a singular meaning from it. And then we got a more clear, I think, bill came out of it, was it 1379 or something, that, but I think it focused more on the money laundering side rather than now we're looking at the money transmission side. So
yeah, there's two different laws here. There's money, there's the obligation to register and report to the state as a money transmission business. And then there's the statute that talks about money laundering, which immediately after Judge Puller's opinion came out, what they call a glitch bill, meaning a bill that changes one tiny nuance in a law to address a specific problem, was passed that expressly added virtual currencies to the money laundering statute, not the money transmission statute. Again, this may be a little bit too in the weeds for a lot of our viewers here. I think the big picture takeaway is Espinoza got a really good ruling from the trial court. The state appealed it. The ruling went the other way, and now there is some clarity as to how at least one appellate court wants us to look at this. And for Mitchell specifically, he's back in the trial court now, where he's either going to try to win the case on the facts, take a deal, or potentially appeal this ruling to the Florida Supreme Court through what would be called a writ of certiorari, which is way too complicated for non-lawyers to understand. The best way to say it is, hey, Supreme Court, I want you to take this case. You're not obligated to, but I'd like you to review this. If they decide to file a writ of cert, as we call it, then the court has a certain amount of time to accept jurisdiction or to decline jurisdiction over the case. That's a really long way of saying Tone will probably be talking about this again.
Yeah.
Yeah.
Okay, guys, I got like 10, 15 minutes, world's fastest shower, but I gotta get out of here and actually go to work today.
All right. Lloyd, David, before you go, I do want to get your comments on what that'll happen in Canada. And you got 5 minutes for me?
Yeah, no, absolutely. I mean, I think I said on Twitter this morning, this is so shocking and so egregious that we can't actually call this shocking and egregious anymore, because I'm just not surprised. Now, I know you and I both saw this morning that they outed that the CEO is using a fake name, was a convicted fraudster in the US.
Mm-hmm.
I mean, this can't be shocking anymore. This is so commonplace for, I mean, this is almost an offshoot of what's the one in California, Boaz Manor. You know, that apparently it's the reverse Boaz Manor. Instead of coming from Canada to the US, this guy went from the US to Canada. I mean, is anyone surprised? I mean, how can anyone be shocked that in this day and age, if you want to use an exchange, and I know some of the people, I'm sure in the comments section, when I made my comments about, you know, I can tell you which exchanges are legitimate or not, were like, you know, I can use any exchange I want, you know, exchanges are all legitimate. No, this is what centralized exchange you use matters. Well, the one thing I agree with a lot of my colleagues who are on the other side of the aisle about KYC and regulations and whatnot, we can all agree or disagree what KYC and what documents are important. But the one thing, and if you don't believe the regulations matter, all you need to look is this. So the CEO's real name was Omar Dahani. He was convicted for fraud in the United States, apparently went to jail, and now he's sitting here, he's running an exchange and commits an exit scam. This is nothing but an exit scam. You know this guy's alive. You know this guy had more access than, you know that other people have access. I mean, this is the equivalent of CRYPTOASSET all over again. I have a girlfriend and I'm gonna go to China and disappear. I mean, this guy is in India right now with $150 million. Probably, you know, able to liquidate. He's probably hanging out with the BitConnect guys.
or Kenneth Lay.
Drew, man, too many young people on this aren't going to know who Kenneth Lay is.
That's what we have you for.
And Ron.
Yeah, like you don't even know where to start. And yeah, so somebody did like a big investigative piece by looking at the actual transactions, and he originally published it on Medium, and then he got suspended from Medium. Nobody really knows why. But yeah, I mean, like all signs point to like a fake death certificate, if there even was one. It might have been just, you know, the widow saying something. The guy is probably still out there with whatever money he's got left. But hey, I mean, like they probably could have spent the majority of it, you know, throughout the years. And yeah, I don't really know what else to say other than there's been a lot of debates. Anybody, you know, let's look at this some more before we get on to Peter Todd, who's a friend of mine, so I don't want to piss him off too much.
The one thing I will say that I thought was really, I mean, and my good friend Jesse Powell saying, you know, that there were a ton of Quadriga accounts at Kraken. I love that. I mean, seriously, I've been saying this. I've been talking to a lot of people who had like half a Bitcoin there, but I haven't found anyone who lost, you know, hundreds of thousands or millions of dollars. Even the Canadians, a lot of the Canadian lawyers reached out to me asking me if I wanted to team up on this. I've kind of passed because everyone keeps saying there's 190 million missing. I haven't found a whale yet who lost money, and I can't imagine in small denominations. So there's a lot of weird parts of this story that's still yet to come. But I'll tell you, man, this is CRYPTOASSET. Just because you have a good looking website that shows your account status, BitConnect, that shows how much money you have in and out, if you don't hold your own keys, you don't hold your crypto. Even I believe in that.
That's a nice segue to my article. Thank you for throwing that just beautifully out there, David.
Yeah, and I can't believe you didn't mention the largest case in the United States turning over crypto in your article.
I don't do marketing for your law firm, David.
But still, this was like, it was making your point for your article. It cried out for what to do with those 11,000 Bitcoin.
Are we talking about this 37-pager, Drew?
Yeah, no, it's light reading for anybody who has insomnia issues. So let's talk about this paper a little bit, and thank you for giving me a chance to chat about it.
I'm here for your marketing purposes.
You know it, baby.
Please.
So academic writing for lawyers is a particularly dry and agonizing experience for non-lawyers to read, and most lawyers view this sort of like reference material. But I wanted to put some disciplined thought into the problem of private keys in litigation. Most people increasingly are holding their own keys. They are not comfortable parking crypto assets on an exchange because, as David just talked about, exchanges get hacked all the time and your money becomes somebody else's value. They just take it away and there's really little recourse. So if you're in a suit with somebody, say a divorce, and your spouse holds a whole bunch of crypto, or if you're in a business where the business has a whole bunch of crypto assets, and there's a litigation where somebody needs to get money, get those tokens from somebody else, you might run into the problem where the party that you're seeking to provide the assets says, I lost the private keys, I can't comply, I can't even get to the assets anymore. It's just like what's going on with QuadrigaCX. And you may be surprised to know that in the United States and Canada and the UK, in that situation, the court will enter an order that requires you to that compels you to comply and says, you have to turn it over. And then you would get in front of the court and say, I can't because I lost my keys. The court would likely then put you in jail. And the court might put you in jail for 10 to 15 years under the theory that it would compel you to comply, that giving up your freedom would make you think, okay, I'd rather give up my money than my freedom. And so for a variety of reasons, this doesn't work in crypto. If you've actually lost your private keys, putting you in jail isn't going to make them magically appear. If they're actually gone and you don't have backups, you don't have a seed phrase, it's not with a third party that can recover it for you, then they're actually gone. I know that Chainalysis has estimated there's more than 2.3 million Bitcoin that are gone forever. So when you're thinking about circulation of Bitcoin, 21 million is the number we all use. It might be more like 19 or 18 something, because that many Bitcoins have been burned or lost. So the question I tried to tackle is not what will happen, but what should happen if you lose your private keys. I come up with a conclusion that many people won't like. And it comes from the basic idea that under US law, courts would rather take away your property than your liberty. They would rather take away a thing from you than put you in jail. And there's a whole bunch of social reasons as well as constitutional reasons why that's preferable. The conclusion that I reach in the paper is that if you lose your private keys in litigation and you have shown good faith efforts to recover them, courts and legislatures should put together new laws that allow states to create new registries that will list transaction outputs and public keys that are associated with the lost crypto assets. And they should instruct regulated intermediaries, your Coinbases and your BitPays of the world, that if they see transactions coming through that include those assets, they should freeze them. They should provide them to the court and allow the court to order them turned over to somebody else. This is an efficient outcome for a bunch of, David, do you like it?
Standing ovation for the professor.
So the thought process is this. It's efficient because if you actually lost your tokens, if you actually lost your private keys and you can't get them back, you're never going to get them back. So it doesn't matter whether you have a limited ability to transact them. They're never going to move. And it doesn't matter whether doing this impairs their value or makes them non-fungible, because they're never going to move. So it doesn't matter. If you're a bad guy or a bad gal who's lying to the court to try to not have to give up your assets, this gives you incentives to not do that, because your assets are going to become less valuable and less useful. They functionally will only be available for black market now. And thus they're not going to be easily transported out of the crypto world into the conventional banking world. It's going to make it very difficult to monetize those assets back into fiat. And courts and legislators can go further and make it a crime to engage in a transaction with these marked assets, which means you can't use the escape valve of something like local Bitcoins. And finally, this is super efficient because if somebody does actually hack you and take away your assets, there's the possibility that they can be recovered. And so it creates a lack of incentives for somebody to try to steal from somebody else, and it makes it harder for them to try to repatriate that back into fiat currency. So if an understanding of the court process as to how courts are going to deal with private keys is interesting to you, or if you're interested in sort of how these sort of things are punished, this paper is for you. I suggest a lot of coffee because it's long and it's very technical, but I think ultimately a lot of judges are going to run into this problem, and I hope that this provides a resource for judges and lawyers, and I hope this provides a resource for them to try to understand some problems they're going to deal with.
Okay, so now that Drew put everybody to sleep, I'm going to say, you know, as someone who actually had to read through this, and when I was joking around with Drew when he started, it's really simple if you look at this in the CRYPTOASSET terms. Because my client, the cab driver who had 3,000 Bitcoin that he deposited on CRYPTOASSET that Big Vern ran off to China with, and that 3,000 is in an identifiable wallet that we've identified and the federal court has ordered back to us. Under Drew's analysis, we'd be able to freeze those Bitcoin and my client would be able to get his money back, which is basically the rule of law in the US.
It's the right result.
And it's the right result. And while this will infuriate a lot of the viewers of this program and a lot of the more libertarian side of the viewpoint of government, the end of the day, the courts are there to help people get back their property. And here, there's no reason why my clients who have 11,000 Bitcoin held up in wallets that haven't moved in 4 years and are sitting there can identify, literally, we can show my clients buying Bitcoin on Coinbase, transferring that Bitcoin to CRYPTOASSET then transferring it to the wallet that it's currently sitting in. You know, that's no different than when the guy steals my car. You know, if he drives it off to the lot, off to a garage, and it's sitting in a public garage, once I go to the police and I report it and I get a judgment saying that's my car, I get my car back. I should be able to get my Bitcoin back. And that was worthy of a standing ovation because I do think it's really important. And I do think for crypto to mainstream, you know, we used to call it we needed a crypto god or a crypto Jesus. I never wanted the title myself. I always thought Jason would be better at it than me. But we need someone or somewhere to go to make the system better moving forward.
So I got a bunch of questions, but I do want to bring Adela in here. Adela, say hi. Good seeing you.
Hey guys, I really agree with what you're saying, David. And I mean,
check out the hat on Adela. Woo! Go Athena.
Yes, Athena all the way.
Oh yeah.
And I'm really, you know, it's all fun and games until somebody loses a shit ton of their own, you know, assets. One thing.
No, go ahead. I was going to challenge David for a second there, but go ahead, Adela.
Yeah. So one good thing about, you know, getting the money transmission licenses, it's really tedious. It's horrible. It's an awful process. But and I feel like there are so many things that can be done to simplify it at the state level, right? Like, for example, you should not have to go through multiple applications of that. And so what the NMLS database does is, you know, it compels the applicant to disclose a bunch of information. Everybody who has a more than 10% ownership in the company has got to be checked out. And that's really important because if you are going to use a centralized exchange, if somebody is going to have access to your shiz, you really need to know who these people are. And that is a huge problem in this space. And like I said, it's all fun and games until it's your assets that are lost and gone and stolen by bad actors. Okay, thanks for coming.
You want to tell our viewers who you are real quick, because it's been a while since we've done this show and I probably picked up a bunch of new people.
Yeah, so my name is Adila, and I have been in the payments space for a long time, 18 years now, starting with digital gold currencies. Now I consult for 2 law firms, and I work with local Bitcoins. Yeah.
Awesome. All right. Hey, David. So here's my challenge to you, right? So let's say I don't know what Big Vern looks like, which I do, though a lot of my viewers probably don't. And I probably should use myself as an example, right? So a friend of mine happens to be in China, and he happens to have, you know, a lot of money and cash on him. And he happens to buy a bunch and meet someone that's selling a decent chunk of Bitcoin. Let's say, let's not break international limits. Let's say maybe $9,000 worth of Bitcoin. And he buys them from Big Vern in cash. And then he goes to deposit that Bitcoin into an exchange. All of a sudden it's frozen and it's confiscated from him because those were the Bitcoin from one of your addresses. Like, what do you tell that person that happens to buy Bitcoin? Like, he doesn't have the ability to know that he's buying from a flagged account. And this is one of the things that Bitcoin provides you.
Drew's smiling. I'm going to let him give you the legal answer, because he and Caitlin Long in Wyoming, this has been a heavily discussed, you know, how we're going to do the laws. And again, just like Drew has some people I don't like, I really like what Caitlin Long is doing in Wyoming, but she has a lot of friends I don't like also who are paying for the financial lobbying behind how they're describing the assets. But the answer is there has to be some type of formal registry that's universally accepted. You know, if you want Bitcoin and crypto to be the universal money, there's got to be some type of universal acceptance of being able to flag the assets. I'll let Drew get more legal answer while I get a plug because I'm about to die.
What you guys are proposing can ruin Bitcoin entirely, because we would have to, in order to make Bitcoin fungible or useful, you're saying it has to go through a KYC process. So then, you know, any point can be flagged. It's
not saying that. I'm asking it to be treated like every other form of money, which is if every other form of property, which is it's illegal to deal in it if it's stolen.
But the very nature of Bitcoin makes it so that it can't function as this kind of internet currency if there can be a big distinction between any coin that has been stolen, basically, because then, like, even with the OFAC stuff, it's like every person that uses Bitcoin or is associated with one of those addresses, when you go to put it on Coinbase and redeem it for cash, it's quite possible you can't redeem it. So it makes it makes the government need to basically hold the Bitcoin for everyone through centralized exchanges, like what's going to happen maybe with Fidelity getting, you know, the ability to hold these things safely with custody. And then what if the government says, oh, Bitcoin's illegal, all these addresses have been used for, you know, child pornography, we're going to keep it all. So it's very dangerous to require, well, it is the law, though. I'm talking in some, you know, abstract.
Yeah. So look, I disagree with you, Sash, and it's to me, it's pretty simple, right? If you have stolen property, you can't transact it. The folks who talk about this breaking Bitcoin and this becoming a threat to Bitcoin as a going concern, my response is as follows. There's nothing about the cypherpunk ethos that says that we should resist laws that enforce property rights, right? There's nothing that says to be a cypherpunk, you have to be okay with theft. There's nothing in that says that cypherpunk is about not respecting property rights. In fact, privacy in its current form is very much about respecting other people's property rights. So I'll start with that. The second thing I would say is that there's really no reason that somebody who, if there's somebody who's supposed to turn over Bitcoin and they don't, and their transaction outputs are marked on this list, and it gets traded across 5 other people, and then ultimately the whitelisting that would be required by an intermediary picks up that this is a transaction output that comes from a listed output, they would be required, as I argue in the paper, to receive notice and an opportunity to be heard by the court. And so those people wouldn't just be like, whoa, my stuff is gone, what happened? There would be an opportunity for them to argue that they have rights with respect to the assets. And this would be handled the same way that any other sort of lien priority contest is handled. It wouldn't be any different. So it would work the same way that UCC interests are adjudicated and so on. But from a big picture where we talk about if, Hinkes, you're destroying fungibility of crypto and everyone's going to hate you and, look for the guys with the torches and pitchforks outside of your house. Yeah, I don't like the idea that it's impairing fungibility, but I like the idea that private parties' property rights are going to be protected. And I think that it's wrong to suggest that fungibility of crypto is more important than private property rights.
Now, what would happen if someone with one of those OFAC addresses, one of the banned addresses, went and sent Bitcoin to every Bitcoin address in the world? Then everyone would own illegal or tainted Bitcoin, and then the whole network would just be kind of shut down under that.
So you're conflating two things, right? The OFAC list, for those who aren't lawyers, is the Office of Financial Asset Control's specially designated nationals list. This is a group of people that, because of national security, is not allowed to do business with US persons. That means Hezbollah, Al-Qaeda, all sorts of, North Korea, all sorts of people who, for national security reasons, are banned by the US from doing business with US persons. And they're on a list that's circulated to financial institutions who are supposed to block or, depending on the nuance, sometimes hold or sometimes allow and monitor transactions. This is not the same sort of list. This is not being, this would not require the same sort of treatment. What you would have is somebody who sees a UTX or a UTXO or a transaction from a public key address coming in, who freezes it, gives everybody notice, and reports to the court, hey, we've got this. And then there would probably be a little evidentiary hearing in order to compel turnover of the assets, where the party that wants it turned over would have to give evidence, usually using a forensic expert, that those assets are traceable to the public and private key combo of the person who was supposed to turn it over. And the other side would come back and say, no, this is my stuff. And then the court would make a decision. So everybody gets due process. And ultimately, it works the way that the law works for all other kinds of assets. It simply recognizes the fact that if a key is truly gone, putting somebody in jail won't make the key appear.
One more question. What if someone uses like a mixer or the Lightning Network or some way to obfuscate the transaction history?
Yep. This is limited for Zcash or Monero. This is limited for Grin or Beam. This is limited for mixers. And obviously, this only applies to public network crypto assets, because in a private network asset, you can just go to the administrator and say, here's a subpoena, comply. It's really a function of what the forensic people are able to trace. If CipherTrace or Elliptic or Chainalysis all of a sudden can do Monero ring signatures, then using Monero wouldn't necessarily be a limiting factor. Another thing that you bring up, which is interesting, is courts are going to have to decide whether this impossibility of compliance is self-created or not. There's a doctrine that says, if the court tells you, Sasha, that you have to comply with this order and you can't comply, it's impossible, that becomes an absolute excuse. It's an absolute defense. But if the court holds that you are the reason you can't comply, that you created the reason, then that's not an excuse and you still have to comply. And in the context of losing a private key, if I lost a private key and it's truly lost, I can't comply either way, whether I'm the schmuck that did it or somebody else is the cause of the loss. So I make an argument, which I believe is a new argument under law, that courts should look at badges of fraud that are used in fraudulent transfer law to see whether they can suss out from circumstantial evidence that this is self-created. Did you set up a whole bunch of NLOC time transactions right before you lost your key, so all your assets got transferred to a different set of private and public keys that you or somebody working with you controls? Did you set up a whole bunch of smart contracts that won't execute for 10 years, where you may or may not have a relationship with the other parties to the smart contract? Did you make a whole bunch of transfers to insiders? All the same things that a court would look at to determine whether a transfer is fraudulent. The court's going to look at this and determine whether the impossibility of performance is self-created or not. If you show evidence that you've hired every forensic expert, that the computer died and you made great efforts in order to try to recover the private keys, if you looked at the wallet.dat on your node that you're operating, then the court might want to handle that accidental loss differently versus what it looks at as an intentional loss. So I don't want to get too much further into the weeds, but if you're a lawyer and you geek out on this stuff the way that Sasha and I do, or if you're a hodler and you're hodler, and you're really concerned about this issue, I would be delighted if you would pull the paper down and give it a read. You can send me comments or questions. My email address is on the first page. I would love to hear from folks about this.
All right. No, that was great. I think you answered the question I've been meaning to ask this whole time, just here at the end. What happens if the court disagrees, like with my view of the lost funds? And also, how does this work for, let's say, funds that were never on a KYC system, right? So this is the other part that I'm not sure. I mean, yeah, I'm sorry, I didn't read the 37 pages, but we're basically talking about contempt of court laws, which allow the government to put you in prison, I think, for 11 months or 18 months at a time.
If it's contempt of court for not testifying in a grand jury proceeding, it's limited to the duration of the grand jury proceeding or 18 months. If it's not, and this is one of the things I talk about in depth in the paper, they can hold you in jail without the same due process you get in a criminal action, as long as they believe that it continues to compel you to comply. I found a 16-year incarceration for somebody who refused to comply with an order. And my old firm, what's that?
Is that the one in Jacksonville? There's like an attorney sitting in court for, decades now, I've heard.
There was a guy in Delaware who was in court, who was in jail for 16 years. And my old law firm put a gentleman in jail for failing to comply with a bankruptcy court's order for more than 11 years. And so this starts to butt up against the law in the United States that you can't put people in jail for debt. It's one of these places where I think there's a lot of room for examination of how the law works. And I make some arguments in the paper that putting people in jail for that the fiction of jailing people to make them comply with an order may not really be the best way to handle this problem.
I'll end this on, I like debtor's court. All bad people should go to jail. I got to run. I got to go work a little bit. So enjoy, everybody. And I'll see you guys on the next show. DC Silver on Twitter is the way to find me. And I take all complaints. And I even gave Athena a little shout out. Adela, I think the hat's great. I'm sending you a Silver Miller hat next.
Thanks,
Later,
David.
David, you better send a check for that.
Wait, what'd you say, Adela?
Said you better send a check with that.
Oh, I'm sorry. I don't do pay for play like Athena. Oh, I'm out. I'm done.
Later, David.
Are you familiar with slander, sir?
And thanks for coming to Unconfiscatable too. Thanks for playing the poker tournament and speaking on the law panel. Thanks, man.
Later, Silver.
All right. Hey, so Drew, back to this particular situation, right? The other thing I was gonna say was we've already had so much hacked Bitcoin, right? Between Mt. Gox and Bitfinex and everything else, you can say that more than like half the Bitcoin at one point or another belonged to another party. So like we're close to the point where almost every Bitcoin can have a claim to somebody else's property.
So it's a concern, and Sasha brought it up with what I call the spraying attack, which was something that I wrote about in an article with Joe Ciccolo from BitAML when OFAC announced that they were going to start listing crypto addresses. The idea is that somebody who's got a tainted UTXO in Bitcoin, for instance, could break it down to Satoshis and spray it across hundreds or thousands or tens of thousands or hundreds of thousands of public keys, addresses, hoping that they can spread the taint across tons and tons of people to render it a useless function, to make it so that people basically would not be able to use it, that everybody would be considered tainted. And I don't think that realistically that's a realistic concern. I don't think that people are ultimately going to give up real value and instead decide that they want to break a system with it. I think that ultimately these are assets that have real commercial value. People are going to want to keep their money. And I think that courts are going to take a critical approach of all this. We have taken for granted that the forensic folks, the chain analysis and the ellipticals and the cipher traces of the world have reliable ways of showing who owned what asset. We know that public key addresses in state-based systems like Ethereum and transaction outputs in Bitcoin-based systems are traceable. But we've seen a move towards systems like Monero and these others that provide better transactional privacy. So I think ultimately we're going to confront some problems in how traceable all of this really is. And that ultimately leads to policy concerns. Do the people that make the laws in the country get comfortable with the idea of having means of moving around value that can't be surveilled? Or are we going to see a world where that sort of privacy that we're provided by these assets is allowed to persist? Adela, do you have any thoughts on that?
Oh no, I'm listening and learning, Drew. I'm actually working at the same time.
Okay, well, I know you're about to take the bar, aren't you, Adela?
Yeah, on time.
So on behalf of all the lawyers in the world, I look forward to you putting this traumatic time behind you, emerging with your paperwork intact and getting out there and doing the Lord's work in crypto.
Fun.
Hey, congratulations, Adela, and good luck.
Thanks.
Yeah, so no, that was just wait, what'd you say?
Oh no, I just said I finally decided to do it.
Oh yeah, I know, because I remember like you and I had a chat like 6 months ago. You're like, I'm never gonna take the bar. I don't need to be a lawyer.
Right.
Well, where are you admitted? You're a foreign lawyer, right, Adela? Yeah. So just another test.
Right. So I'm taking the exam in Wisconsin, which has a ridiculously high pass rate. So it was kind of like a strategy because I'm not doing it to practice, you know. It's just sort of a precautionary measure and, well, an opportunity to kind of like hit a milestone.
Excellent.
Yeah.
So
Gotcha.
So anyway, if anybody wants to think more about the implications of how crypto assets are going to function in the judicial system, take a look at the paper. Love to have any of your comments. It's ahinkes@stern.nyu.edu.
Yeah. So I just want to throw a couple of quick comments on this. So Bitcoin is going to be significantly more fungible. I expect it to be more fungible than Monero when you're properly using it. I mean, some of those tools are almost exist today. The other thing that I was gonna kind of mention on this is it's interesting because what you're describing, Drew, is exactly what Craig Wright, our resident fake Satoshi, wants for Bitcoin SV. And this is kind of exactly how he's building Bitcoin SV with almost this kind of compliance implied in there.
Well, I'm not familiar. Can you elaborate a little bit?
Well, he's all against, like one of the things that he's very he's against is Bitcoin being used for, you know, potentially illicit activity. So this would be something right up his alley with Bitcoin SV, and something like this where, like, if you don't like how the transaction is being done, you can kind of freeze it.
Sure. I see the appeal as the issuer or as a major holder. There's a land grab happening there. It's the idea that you can be the coin that is A-okay with the regulators, and then you can go and tout compliance and say, hey, everybody, you have a lower chance of seizure using my asset in my system. You have, it's safer to use it here. And that's interesting. My view of the world is the U.S. has always understood that as long as they're issuing paper currency, that paper currency is going to be used for all sorts of things, both kosher and illicit. The number one tool for money laundering in the world is the US $20 bill. And I think I read somewhere, and I'm not sure of this, that the majority of US bills actually reside in other countries. So, as you see the growing digitization of economies and you see countries pivoting away from fiat and starting to limit what fiat can be used for, we have an opportunity with crypto to have this be in a system where it's not unilaterally controlled and where monitoring doesn't exist, government monitoring doesn't exist, or this can be used in the dystopian manner to provide 100% surveillance on all commercial activity undertaken by people who use the currency. My hope is that this technology that I love very much and have invested my career in is not used to create some bizarro version of the Chinese surveillance economy or some bizarro version of that really awesome Black Mirror episode with Ron Howard's daughter in it, Bryce Dallas Howard. I don't want to see the world go in that direction. And I think that crypto provides an amazing opportunity for people to preserve their sovereignty.
All right, no, thanks for that. And we have an additional guest coming in. Welcome, Stephen Pally, to the show. Yeah, you've been on the show just once during our epic, I think it was like a 6-hour marathon for the SEC stuff. Thanks for coming back to the show.
You bet.
And welcome. So just give a brief intro. Most of my audience are not familiar with your work, and we take it from there. I'll try to get your comments on a couple of the stories we already covered.
Sure. So my name's Steve Pally. I'm a trial lawyer with a law firm called Anderson Kill. I'm actually in our New York office today, which is why I couldn't join. I spend most of my time in DC, but I practice up here as well. And I've been handling commercial disputes involving just about everything for the last 20 years. And on the side, in the last couple of years, I developed a practice involving software development, which led me to Bitcoin, and Bitcoin in particular as a means of basically as being programmable money. It solved a business problem for me. So one of the things that I do kind of for fun and also to keep up with things is I do a weekly blog post with another lawyer, Nelson Rosario, and we cover 3 new crypto-related lawsuits, either new filings or cases that are being handed down. What's interesting to me, and I'm sure all the panelists will agree, I actually have a hard time just picking 3 new cases each week. There's so much law developing in this space.
Yep.
What's interesting about the law, and it's great to see Drew writing about this, is the law is perfectly capable of dealing with this incredible new technology. I have yet to see a judge say, you know what, this is too complicated, that we can't handle it. Just like, go deal with it yourself. What I find is things that I learned 20 years ago or 10 years ago, I see happening today. So the case of the Quadriga guy, did I pronounce it right? Is it Quadriga? The Canadian exchange. This reminds me of a case that I had 10 years ago where a guy ran up with a bunch of bonds that were supposed to fund structured settlements. And he ran up to Bolivia. He used a bunch of banks as intermediaries on the way. And I can't remember if I told the story last time I was on your show. I might have, but I'm just reminded of that. He ran away, having stolen $150 million to a country where he thought there was no extradition treaty, and he was collected. They sent bounty hunters after him, knocked him over the head, threw him in a helicopter, brought him back to the United States. The thing that I'm reminded of too, when I'm thinking about the Canadian exchange, is one of the things that plaintiffs' lawyers did, I was on the defense of that case, was they sued banks that had been depositories. And one of the questions that I have is thinking about who's culpable here for these losses. Plaintiffs' lawyers suing people, I'd be looking around for targets. One of the targets to think about certainly are exchanges, where it appears that some of this money has been parked. So that's kind of I've got an old school practice, but I have a very keen interest in the development of new technology. I always have.
Super.
Yeah, so
you're here, Pally. Good to have you.
Yeah, let's get your views on some of those cases. You want to throw in some more opinion on the Quadriga case, and what do you think is going on? Everyone, like, now that some of the code geeks are digging into some of the codes. They're suggesting that there was never any cold storage, and it didn't even exist, and everything was just basically running a straight up Ponzi scheme.
I don't understand how somebody can get away with that. And actually, I was told this sort of as a journalist, not as a lawyer, but I was asked for confidentiality. It was apparently an open secret 3 years ago in Canadian Bitcoin circles that this guy, what's his name, that Michael Patron and Omar Dahani were the same person. People knew. And if you do a search, if you use, it's a subscription search, but if you know how to look at public court filings, you can see that Omar Dahani used the name Omar Patron in 2005. You can draw the connections pretty quickly between the co-founder of this exchange and somebody with pretty relevant criminal history. It's kind of old school gumshoe investigative work, and I'm surprised more of it wasn't done. Easy to do. And also, I'll say one other thing, not to judge people.
Well, the other thing is like what David Silver said, the 190 million. Oh no, I was gonna say like the other thing is that the $190 million number might be grossly overblown, and it's not even close to that. So that could be another reason why they've been sliding under the radar, because there wasn't that much money. I'm sure there was a lot of money, and there was enough money, but where I wanted to head with this, and it's a slightly new direction, though I do want to get your thoughts on the Mitchell Espinoza situation, which was another big point of contention. I do want to get to a Peter Todd little discussion. Let me do a back to screen share. Wrong tweet, this one. So what happens is, and this will probably slightly apply to what happened in Texas, and unfortunately both David and Jason are not had to run off. And so a Ponzi scheme is taking money from new investors, giving it to old investors. And what Peter Todd is saying, and I kind of agree with him, that if you actually have funds in cold storage, which may not be the case in this particular exchange, but if you have funds in cold storage, it's not like very safe for you to constantly take those funds. So you could still run a fully reserved exchange without doing anything shady, but for security reasons, you are literally taking new funds from new investors and directly sending those to old investors that want to cash out, just to avoid going into cold storage. But according to the definition of a Ponzi scheme, that's what you're doing. So how does this get resolved in the law so that you could move new investor money directly to old investors through hot wallets in order to maintain the security of cold storage?
So the question is, what you're saying, I think what you're saying is, or what Peter is saying is, all depositor funds were fully reserved, and so it's not a question of sufficient resources being unavailable. It's a question of where you're getting that money from. I mean, money is fungible, right? So not according to Drew's prior 37-page paper, right?
Well, hang on, Pally. Money is fungible, meaning a US dollar bill is equivalently useful to a different US dollar bill generally. Yes. Pally?
No, I'm here.
Yeah. So money is fungible generally. There's, if you have a fund serial number on one, it might be worth more. The silver certificate that I have as like a piece of memorabilia is worth a little bit more than a regular fiat dollar because people collect it. But the idea of fiat currency is that the government stands behind the instrument that it issues and it's worth what it's worth.
Right.
These crypto assets, to a certain degree, are already non-fungible because there's tracing analysis available by all these vendors who are already able to tell whether it went through a series of known public-private key combinations. The idea of complicating fungibility by adding in this class of assets put on a list somewhere that would not be qualified or permitted to pass through some intermediaries would impact the fungibility. But again, if you're not dealing in stolen property, and if you're complying with the law that I sort of propose, which is wallets need to pass transactions through this whitelist, then you don't really have this issue. You would be.
Should we do the same thing? I mean, I guess my question is, should we do the same thing with $20 bills and $100 bills, all of which have serial numbers on them too?
We could, but is there a practical way to do it? With crypto, there is a practical way to do it.
Scan currency? I mean, practical?
Yeah, you can tell regulated intermediaries that they need to reference a whitelist by smart contract before they process a transaction. Same way that Polymath, for instance, works, or Polymath is supposed to work for tokenized securities.
Well, so your answer then to Peter would be, because the funds are not fungible in the same way as fiat currency, you actually you can't do what Peter proposes.
What's what Peter proposes? I'm sorry.
He's basically saying, look, it's insecure. I think perhaps in part what Tone was proposing. The argument is, look, it's insecure to take funds out of cold storage. So what we want to do, so basically paying people in effect with paying old customers with new customer crypto should be permissible for security purposes. But according to your analysis, that would make it, I think that would make it effectively a shell or a Ponzi under traditional analysis.
And Drew, when you say regulated intermediaries, who exactly are you talking about?
Talking about BSA. I'm talking about federal MSBs, federal MTLs, and state MSBs.
So financial institutions.
Money transmitters. And you could extend it through state level amendment to stolen property statutes to say, if you're doing a transaction where you're dealing in anything on the list, then you violated the stolen property laws. That's a way to extend the reach of this further to say, you have to reference this list. And again, sounds like a whole big thing. At the same time, this is a smart contract thing that most wallets could easily integrate.
All right. Okay, well, I think we're going to get back to this topic another day. Pally, any thoughts on the Mitchell Espinoza reappeal? We talked about it, and like the other lawyers on the show said, this was expected.
Yeah, this was the Florida case, not the Michigan case, right? There was a Michigan federal case.
Right. No, I've been trying to get to the Michigan case. Let's talk about the Florida one first, and that will lead us right into the Michigan case.
I mean, this is totally expected. I was surprised and said so at the time 2 years ago when the case was dismissed. I thought that's an intermediate appellate court, right, Drew? I thought that court.
Yep.
I thought the analysis was correct, and I didn't think much of the trial court opinion. However, I might feel emotionally about it. I thought the analysis the trial court undertook was not good, and I would have been surprised if it hadn't been reversed. Then I said so 2 years ago.
Yeah, I think most lawyers have skewed in that direction, notwithstanding how promising the trial court opinion looked for the crypto world.
Oh, I loved it. And I knew, Jason and I have talked about this a lot, that the facts were just incorrectly applied to the outcome, or the outcome was based on spotty legal analysis.
Look, the defense counsel did a wonderful job convincing the court to look at this as property instead of as monetary value.
Shout out to Charles Evans.
Shout out to Professor Charles, one of our collective, Adela, foundational people.
He was the best man at my wedding.
He's shortlist on the reason that Adela and I are active at all in this industry.
True.
But what's kind of interesting too, you guys might have touched on this, this case dates back to 2013.
Yep.
It's 2019 now. So the gears of justice or injustice, depending on how you view it, they grind really slowly, which I think, we can assume we're going to be looking at the tail of these cases for years to come. It just takes a long time. Drew, do you think this is going to be taken up? Or you may not be able to comment. You probably can't, but.
I have no personal knowledge as to whether it's going to be appealed or not. If it's appealed, it's a discretionary appeal. It would be a cert appeal.
Right.
And the Supreme Court may or may not want to take it. And if it's not appealed and then it's remanded back to the court, then Mitchell's looking at a trial or a plea.
Seems like a good case to take a plea on, in my personal opinion.
Depends on the offer, right?
Yeah, absolutely.
Always depends on the offer.
All right, guys, let's jump over to the Michigan case.
I want to jump in. So I want to just say thank you to everybody. And Tone, thanks for having me and letting me talk a little bit about my paper. Sasha, Dels, Pally, love you guys. Great to be able to share a screen with you. And thanks a lot, everybody. Take care.
Great paper, Drew, by the way.
Thank you so much. Bye.
Guys, I have to take off as well.
I do too. I have a 12 o'clock meeting.
All right.
All right, Pal, you want to stick around for a little bit?
Yeah, sure. I can stick around for a few more minutes until we can talk about the Stecu case. That's
awesome. Yeah, that would be great. All right, thanks, Adela. Hey, I can't believe I missed you at Unconfiscatable. You were on our posters. You better come next year because I want to reuse those.
Dude, it was like the biggest regret of the year for me, basically. I
know that's what a lot. I know it's what a lot of people said about it. I need to turn my light on as well.
I will be at the next one. I had too much work stuff, and there's no way it was gonna happen.
Yeah, no, you'll have a 6 months heads up, even more. All right, awesome. I'm gonna turn on my light. Ladies, thank you so much for joining. I'm even gonna go to a big screen so you guys can.
Polly chases people off the show, so.
I have that effect on people.
Oh, we're so glad to have you on. I've been following your work, Polly. It's always one of the first places I look to find the news. So thank you for everything you're doing. Bye,
guys. Take care. Have a good day.
Awesome, guys. Bye.
Bye.
All right, so let's briefly talk about this. This is like my life of live streaming. This is like we're going on for like 2.5 hours now in total. I do need to eat eventually and do some work as well. I can't believe I'm getting like all this time from lawyers. So let's jump onto it.
So this is 10 more minutes to argue. Yeah. So basically, there's a federal case in Michigan, United States versus Stecu. It's any lawyers out there who are listening, the docket number is 18-20579. It's in the Eastern District of Michigan. On February 1st, the court issued 2 rulings denying motions to suppress and to deny an indictment. And basically, it's honestly, it's kind of embarrassingly not that interesting. What the court said was, and I'm reading, the court said, even though the Bank Secrecy Act, so 18 U.S.C. 1960, even though it doesn't say what counts as money for purposes of determining a violation, it's clear that it pertains to the transmission of funds. And it also says federal courts have repeatedly found that Bitcoin constitutes money and funds within the meaning of the statute. It cites a Mergio case and it cites U.S. versus Fiala. So, I mean, anyone at this point who says they don't have to register as an MSB because Bitcoin is wrong. It's just not that. It's honestly, it's getting to the point where this court cited 2 opinions. So now we have 3 opinions, probably more that say that for purposes of MSB registration. The question I have is, how many other cases are we going to find? Do you know what a string cite is, Tone? Have you heard the term before?
No, I have not.
A string cite is where you cite a legal proposition, and then you cite a bunch of cases after it. Now, 10 years ago, I couldn't have offered you a string cite, like multiple cases for a legal proposition for anything having to do with crypto. Now, just for purposes of BSA from an MSB case, I can cite at least 3 cases that say Bitcoin is money for purposes of MSB registration. So bad news for the defendant, sort of good news generally, I think. Go ahead.
Yeah, so here's the thing that we have to constantly keep clarifying on the show, because I do pick up new subscribers. So if you are, selling Bitcoin through local Bitcoins, which is how a lot of these people get nabbed, selling your own Bitcoin is okay. It's when you've made a business out of buying and selling Bitcoin, and you're making money on percent between them.
Transmission involving third parties.
But what is the third party in this case? You're the third party?
Who's the third party? I don't have the opinion in front of me. I don't know that all the facts were laid out. Let me see. Let me look at the next little blurb here. Presumably there were other folks who were involved. I think this is, I believe this was a case involving somebody who was not just buying and selling Bitcoin for himself, but was acting as an intermediary for third parties. So I can't say that for absolute certainty.
Gotcha. But even if you are as an intermediary for third parties, you have to be making a profit on that, right? Because I know I've connected buyers and sellers in the past, but I've never taken a cut on that.
I'd hesitate to offer an opinion on that, actually. You may be right, but it's not, that's actually, MSB registration is not a core part of my practice. So I don't know the ins and outs of that. I wouldn't want someone to hear this and be misled. I would honestly, personally, and Florida, by the way, doesn't have that third-party transmission requirement, which the Espinoza case actually mentions. I would be very careful, be acting as an intermediary in any way, for profit or not for profit, in connection with financial transactions. It's really easy to get dragged into things you don't want to get dragged into, and then having to argue lack of pecuniary benefit. You don't want to be part of other people's transactions.
Yeah, no, that's really interesting. That's why lately I've just been sending people to websites, because I've asked some of the sellers of Bitcoin, the legal sellers of Bitcoin, like the ones that KYC, and I'm like, hey, can you just make a site? And then when someone asks me, hey, do you know anyone that buys, anyone that sells? I'm like, yeah, sure, go to that website.
Local Bitcoins, yeah. I mean,
well, no, but something a little more on a KYC side. But yeah, oh, that's interesting. So people in the chat are suggesting, well, maybe the exchange could serve as that third party that allows them to make that transaction, which would be an interesting case. So has he been convicted, and is he serving jail time? Or
he was indicted. So basically he was charged. I think it was an indictment and not an information. Yeah, he was indicted, and the first two things that his lawyer did was one of the things he did was filed a motion to suppress evidence, and the other was a motion to dismiss the indictment, saying, it was, the statute doesn't cover this, because I guess he argued Bitcoin isn't money. He tried, he failed.
Yeah, everyone seems to lose on that Bitcoin isn't money. Hey, if I got you for 3 more minutes, the one topic that I did not get a chance to get to with the other lawyers was, I don't know if you know the bill that the Representative Sidney Axne wants to pass through Congress about, I guess, spending more money and understanding Bitcoin transactions, and specifically Bitcoin-Zcash and Monero are mentioned. Because of, for more privacy reasons. I don't know if you read this or not.
I haven't, no.
Oh, okay. So in that case, never mind. And the other topic that we talked about was, no, that's not even all that crypto related. But I do want to follow up. Did you take a look at Drew's paper?
I've only had a chance to skim it. I have not had a chance to give it the attention that it deserves. Drew is one of the sort of brightest lights of the crypto law bar. I'm sure that it's fantastic. I highly recommend people giving it a read.
All right. Well, Pally, thanks for joining us. You're in our little group chat now, so you'll be apprised of all the topics that are going to be mentioned in the upcoming episodes. And you're right, we really have to do this show every week, because when we don't, it runs into 3 hours with like way too many cases. But yeah, we'll be back. We'll try to do this more often, and hopefully you'll be on more often with us. Keep doing all the great work that you do.
Thanks, man. Nice chatting with you.
All right, thank you.
Bye.
Hey guys, hey, thanks for joining us on this episode. Man, the moral of the story is be real careful with your Bitcoin transactions, even when you are connecting buyers and sellers. And we do have to get back to this notion of using cold wallets just for security purposes, because you can also run into, accidentally running a Ponzi scheme even with full reserves. And if they want to get you, they'll get you. So you really want to be careful across the board on a lot of this stuff. And I know it's been a long episode. I guess I haven't looked at the price of Bitcoin myself all day. It's like 5 o'clock in the US. Let me go ahead and take a look at it, and I guess I'll screen share it since I will. And I am in London. Please check out the calendar view. The calendar is going to look a lot better and cleaner, but even for now, you can go ahead and see where I am in the month of February, which conferences I'm speaking at. I'll be at Advancing Bitcoin starting Thursday. Today is, I think today is Monday. Is today Monday? No, today's Tuesday. Why is my calendar? I should probably refresh it. Maybe that's why it's showing me that it's Monday. It is Tuesday, unless I'm, well, let me. Yeah, there we go. Today is Tuesday, and that's what got me confused right now. So anytime there is a dot, that means I'm doing something. We're going to actually display it right here, so you don't have to click on it to see what it is. And the workshop's coming up, the UK this weekend, then Thailand, then Vienna. There may be something else in between. Still working on my calendar. Carnivory dinner is still happening, so please check out the Eventbrite through Jimmy's Twitter. And Coinsbank Cruise, I'll be speaking on it as well. I love the fact that the price ticks up every second. I got to implement that on a lot of my stuff as well. Please use the affiliate links if you're going to sign up for some of this stuff. It does help out and support this free channel. All right, price of Bitcoin. Didn't really intend on doing price today, but hey, I'm curious myself. The weekly chart has not moved. We're at 34.15. So we're still stuck at 34. Nothing is happening. The daily chart has not moved at all. The 12-hour chart is starting to get in a little bit of trouble. Be very careful here. Your moving average is coming down. This is like the blue line of death. If you go below this line, I accept a major acceleration of the drop in prices. The 4-hour chart is kind of useless. Bounced off this 9 right here, but now we're kind of stuck. Are on a 5 of 9, but it'll probably flip over. We're just not moving, so it's really not interesting. A little bit of pressure off the longs, so that doesn't really mean much. I'm actually more curious at the S&P 500 right now and gold. Gold continues pulling back off the 9. Let's see what happens there. Really curious on the S&P right here. Here's the daily S&P, and it looks absolutely gorgeous. I'm really liking this. We are waiting for my sequential. Come on, calculate. So this looks great. It looks like we broke to a new high. So what was the high? Oh man, computer's a little slow. The high, and so the close was 27.12. The high was 27.13, and the current candle, the high is 27.13.75, and the close is 27.12.25. But we didn't close yet, right? Like the day is still active. So if we can close at a brand new high, this is great. Again, 27.50 is the magic number. And we do need to break above these moving averages, currently sitting at 27.30 and 27.45-ish. if we can break above that and close there, this is going to be absolutely sweet. Again, I'm running with limited bandwidth here in calculation, so I can't calculate the sequential. So this is pretty good on this one. That's about it for me, guys. Please support with the affiliate codes. It's been a long episode of the Bitcoin Law Review. Hope you guys got a lot out of it. I know I always do. Always scared with everything I do in life after speaking to these guys. Yeah, it's a really important show, and hopefully I will be doing it more often. And see you all on the next one. I'm in London all week. I think it's time. I had an awesome, nice little meat dinner last night. I'm probably gonna go back to that place. I gotta tweet out more some of these awesome places. All right, I'm gonna stop screen share. Thank you all for watching, and see you all on the next one.